Hello everybody, we're looking at Lumber Liquidators holdings right here, and so it's up 30% today, and it doesn't have an awful lot of binary news or fundamental news to actually do this, and so right now it's deeply overbought on the CCI, and so we've seen this big move up, but within the last hour we're starting to see it's hitting resistance, and so by the time you're watching this video, you might actually start seeing that it's falling, and so right here we're expecting pullback, and even though there might be good fundamental news, which there is an awful lot of, but even if there was, it should not be going this high this quickly, and so you're soon going to run out of demand and have supply come into the market. So the first thing that we see right here, of course, the moving averages, it looks bullish from that perspective, but the oscillators are showing some bearishness and also some divergence right there. When it comes to Bollinger Bands, you can see right here that the Bollinger Bands cannot even keep up with this move. They're actually coming outside the Bollinger Bands now, so far out of the Bollinger Bands that they can't even keep up with the move. And so clearly, deeply overbought. There has to be a pullback. Doesn't matter how good this fundamentally is, there has to be a pullback right here. It's deeply overbought right here. Another thing is, when we look right here, this is actually how I found out about it, is that I was looking at Market Chameleon, and I just looked right here, and I saw the IB rank, and it was the IB rank of 100. And implied volatility went up over 200% today. And that's something you never really see. Even places like SPCE, those didn't even have 200% run up in implied volatility. So from that perspective, it's outside the Bollinger Bands. CCI showing that it's deeply overbought. There's oscillator divergence. It hit a major supply level, which was up here at 1060 up here, and it's starting to pull back from there already. So those are some clear signs that there's pullback. And right there, we just saw on hourly, it went red right now. And so I think this is a good time to be short, but we want to be short with calls. It's a safer way of doing it, and we can place a volatility contraction in the process. So right here, we can look at the options chain, and we can see what expiration we want. Today's February 20th, 1:54 p.m. that I'm recording this Eastern time. And so right here, the weeklies aren't going to give us much decay, and so we want to go a bit further out. The optimal time usually for options when you're doing these sorts of volatility contraction expansion trades is somewhere between 30 and 60 days, and so we want to look that far out. Something better would be closer to April 3rd. And so right here, the problem with this one though is that this is a non-standard expiration, so you start to see some illiquidity right here, and so you have to really play around with it. You can look, at the 27th, and then looking at 27th, it's still fairly illiquid right here, and not necessarily like it is illiquid in the sense that the bid-ask spreads are wide, but then also in the sense that we don't even have out-of-the-money strikes. Looking right here, it's far more liquid. 280, 285, so it's only a 5 penny wide market, and we do have out of the money strikes. Right here, shorting the 11 calls is something that I'd probably be doing. Naked 11 calls that you can short right here, you get a premium of 280 for doing so. And so that's the trade right here. Short the March 20th, 2020 11 naked calls for a bid of 280. They've run up way too much. They've run up about 3,000% today. Implied volatility is way too high right here, and the run-up in implied volatility, as we can see, is over 200%, close to 250. And in just 4 hours, we've seen this big of a run-up, and it's hit a major supply level. So I'm looking for a sharp pullback from here over the next day, day and a half, and then after that, it might keep on continuing up, but we can just cover our shorts, or if you're doing the call trade like I told you, you can buy back the call after it goes a bit lower. I think this is just a temporary reversal. It's still looking bullish a longer term on the multi-day or weekly time frames. It's just on this time frame is deeply overbought, so just a small pullback that we're looking for. Other than that, everything tends to seem good on the longer term time frames. Just looking for a pullback, and then after that, we can either get rid of the trade altogether by buying back that call, or after selling the naked call, the price goes down, we turn it into a covered call at that point. Whatever we want to do, there are many different things you can do in this case, but it's something we want to think about. Lumber Liquidators gone up almost 30% in just 4 hours. It's deeply overbought, shorting the strike 11 March 2020 or March 20, 2020 calls for a bid of 280. Looking for some volatility contraction and looking for a pullback in the price. Stay tuned, stay subscribed. We're going to update you on this trade with any trade adjustments. Until then, happy trading.